Hi guys, KP this side from InvestorWise. Hope all of you are doing good and you are enjoying the bullish phase in the equity markets with Nifty close to 12,000. It is the best feeling for any bull in this market. So today, after a long time, I am doing a stock analysis video, and the stock which I am going to cover today in this video is Muthoot Finance. Uh, as on date, whatever stock analysis videos have been done, I think I have covered around 8 videos in last 1 quarter or so, and all the stocks have done their targets comfortably, and I'm very hopeful that even Muthoot Finance will give you good return in short span of time. So if we talk about Muthoot Finance, for the introduction about the company, it's a Indian financial corporation and is the largest gold loan NBFC in India. So when I say gold loan NBFC, the primary business of Muthoot Finance is to borrow loan from you as a security and give you loan against it. So loan against security, in this case the security is gold, which means you can give your gold as a mortgage to the banks, and you can take a loan against it. Is it that we have specific NBFCs which give loan against gold? Answer is yes. There are some companies, some NBFCs like Muthoot Finance or Manappuram Finance, which primarily lend you money against gold, but even banks are allowed to do it. And there is a twist in respect of this, which I will discuss later on. But for the time being, let's understand what are the other businesses which Muthoot Finance is involved in. Apart from loan against gold, they also do wealth management services. They also sell gold coins. They are involved in foreign exchange services, money transfer, and some other business practices also they have. The company is headquartered in Kerala, and they started their operations way back in 1939. It's a very old corporation. They have more than 4,400 branches, and they also have their operations internationally spread across countries like UK, USA, and UAE. The stock is listed both on BSE and NSE, and their target audience, that is their customer base, comes from small businesses, the SMEs mainly, the vendors, the traders, the farmers. These are their main customer base. If I talk about the price range for the stock in the last 1 year, if we consider the low and the high for the stock has shown a lot of volatility. For obvious reasons, we know during pandemic the stocks have shown a lot of downside, and nothing different with Muthoot Finance. They did a low of 477, which obviously happened in the month of March 2020, and they have done a high of 1405, which means there is a movement of close to 1,000 rupees in the stock price in last 1 year. And now the stock is trading at 1142, which is trading at a discount of 20% to its 52-week high price. So right now the discount on the stock is 20% compared to its 52-week high, and that is where I want you to pay your attention. When index is trading close to 12,000 and you start feeling that this is the pinnacle point, this is the point where markets probably cannot go further up. Guys, you need to understand this. I keep getting this question so many times on a daily basis from my clients and from random people who follow up InvestorWise page, that sir, do you think this is enough of it? This is the end of it, and from here the markets will go down? Answer is no. You need to understand the index is not made up of all the stocks in BSE and NSE. Index is, so if I talk about Sensex, it is just made up of 30 stocks. If I talk about Nifty, it is just made up of 50 stocks. You need to understand these are the 30 and 50 stocks which will control the overall picture of the index. So how these stocks will impact the index is based on their market capitalization. So stocks like Reliance, TCS, the HDFC Bank, the HDFC Limited, the Bajaj group stocks, these stocks have more weightage on index. So when these stocks will perform well, automatically index will go up. But that does not mean that all the stocks in the market, that all the stocks which are listed on the exchange, all of them have crossed their 52-week high price. It's not like that. If I have to pinpoint and give you stocks, I still find there are so many good stocks which have no problems with fundamentals. The companies have revived their business superb post-COVID unlocks, and still the stocks are trading at very cheap prices, and Muthoot Finance for me is one of those stocks. Obviously, the reason why I have taken up Muthoot Finance today is because I feel we are into that phase of rally where most of the segments, most of the sectors have already shown a lot of upside, but financial sector is one such segment which is still having a lot of upside potential left. And we saw a glimpse of it in the last week. You would have seen some banking stocks have revived very good, especially after the RBI governor speaking up on Friday during market hours, and we saw a lot of financial sector stocks have shown a lot of upside, be it ICICI Bank or SBI or HDFC Bank. They have shown a lot of momentum, but still I feel this is just 10 to 20% of it, and still a lot of momentum is still left. Now, after listening to this, please don't do the stupidity of buying all the banking sector stocks, because I've already made a video earlier on this, that there are inherent risk involved in financial sector stocks. So you have to be very, very wise in making a choice. And that is the reason I am making this video on Muthoot Finance, because I still feel that Muthoot Finance is one stock which is yet to give you a lot of upside. Okay, talking about the fundamentals of the company, if I go by the EPS for Muthoot Finance right now is rupees 85. I've told this many times. As a shareholder, the first and the foremost thing for me is how much earning per share the company is capable of generating, because at the end of the day, I'm not just interested in the sales or the turnovers or the revenues. I have to see what is it that is left at the end of the day for the shareholder. And for the shareholder, whether it comes in the form of capital gain or it comes in the form of dividends, at the end of the day, for a shareholder, what really matters is the earning per share which company is able to generate. And if I have an EPS of greater than 50 for a stock, definitely that stock seems to have a lot of upside potential. So EPS at 85 looks very, very healthy for Muthoot Finance. If I look at its P ratio, that is where I can do the comparison with the industry average and understand whether stock is trading at a premium or it is trading at a discount. The P ratio for Muthoot Finance is just 13.4 times, which means you're just paying 13 rupees per share. That is 13 rupees for every 1 rupee of earning that company is generating. But if I compare it with the industry average P ratio is close to 29.5 times. You can understand the stock is almost having a P ratio with 50% discount or more than that as compared to its industry average. Industry average is 29.5, whereas for Muthoot Finance, the P ratio is 13.4 times. It has a stupendous book value of 300 rupees per share. And you know this, I've told multiple times, book value is what makes you understand how much reserves the company is sitting on. It has got a book value of 300 rupees, close to 300 rupees, and it has a price to book value ratio of 3.9 times. And for me, stock with a price to book value of anything less than 4-5 times always makes a stock interesting from buying angle. It has a beta of 1.22 times. Yes, that makes the stock a little aggressive, but then it won't be considered as a very aggressive stock. Yes, it is moving faster in both directions compared to index, but yes, the volatility in Muthoot Finance is still acceptable as an investor. You won't see some wild movements in the stock, but yes, beta value close to 1.2 times make you understand that stock has a lot of momentum in it. And the idea of taking up Muthoot Finance in today's video is that we want a stock which probably can give us a good return in short span of time. Keeping that in mind, I have taken up Muthoot Finance. If I look at its net profit margin, guys, their net profit margin is stupendous at 32.7%. Believe me, 32.7% of net profit margin is a very, very strong number, very healthy number. Not just that, if I compare their net profit margin with 2019 NP margin, their net profit margin in 2019 was 27.7%, and in 2020 it was 32.7%, which means their net profit margin is also going up. That means the net profit as a percentage of sales is going up, which can be for two reasons primarily. One is cost cut that companies might be doing. If their cost is going down, that's a very good sign. And the other thing is that maybe companies generating more other incomes. Based on that also, it might happen. Okay, if I look at its return on equity, again, as an equity investor, this is one of the most important parameters which I will look into. Their return on equity is 26.5% as registered for March 2020. 26.5% of return on equity for any share listed on Indian Stock Exchange is superb number. But what adds more to the confidence is that for 2019 March, they have done a return on equity of 20.9%, which is close to 21%. But still, even this number has shown significant jump in 2020. Again, return on capital employed, that is total money invested in the business, that is whether it's equity or debt. Total money invested, based on that, if I calculate the return on capital employed, they have a massive return on capital employed, which is close to 31.7%, and 2019 it was 30%. So overall, if I compare numbers between 2019 and 2020, then company has shown significant jump in all these parameters, which as an equity investor I would be interested in. For last 3 years, they have shown a CAGR. CAGR is compound average growth rate of 18%. That is, their sales are growing aggressively every year. If I talk about their reserves, they are sitting on a total reserve of 11,400 crores, close to 11,400 crores, or you can say it's a little more than that. That's a very huge amount of reserves which the company is sitting on. And if I look at their debt, their long-term borrowings are close to 10,700 crores. Is 10,700 crores too much of a debt for a company? That also you need to consider as an equity investor. But 10,700 crores does not seem to be too much of a debt if I look at it from the reserves point of view, because their reserves are sufficient enough to take care of their long-term borrowings. Plus, if I look at its interest coverage ratio, they have an interest coverage ratio of 2.34 times, which again makes it look very healthy, because interest coverage ratio helps you know how much earnings are available to pay off interest. So company is having 2.34 times of earnings to pay off their debt, which makes it look very safe and stable. So they will never have this crisis where the company fails to pay their debt. And I'll give you more reasons why I don't see any crisis coming in for Muthoot Finance. If I consider their profit numbers, guys, from March 16 to March 20, that is, if you look at this 4-year jump in the profit and sales figures, from March 16, when their profit figures were 817 crores, I'm talking about net profit. March 20, their profits have grown up to 3,168 crores. 3,168 crores from 817 crores in 2016, which means in a period of 4 years, company's sales have registered close to 300% of growth. Isn't that a massive upside that company has enjoyed? Even their sales have grown almost more than 100%, which is from 4,900 crores, it has gone past 9,683 crores, which means their sales have grown by more than 100% in last 4 years. Now, some of you might be thinking, sir, we are discussing about March 20 numbers, March 16 numbers, March 19 numbers, but what about this COVID situation? Now, guys, you would be taken by a good big surprise when I tell you this, that for June 2020, that is the last audited results which were available. If I compare June 20 with June 19, year on year, to your utter surprise, Muthoot Finance has shown a growth in their net profits. Their net profits in 2019 were 530 crores, and in June 2020, their net profit has become 840 crores. Isn't that interesting? And the moment you hear that news out, the first thing you think is, how on earth can this stock be trading at a 20% discount to its 52-week high value, with index being close to 12,000? That's where the magic lies, guys, and that's what I keep telling you. The only reason why you come to experts for services or for advisory is you leave the work to them to figure out those stocks which are the real gems. That is, no matter where the index is, I don't know. I feel this generation is so much derived by the index values, that you decide everything based on index. If index is going up, I would like to sell everything and book my profits. If index is going down, I would probably buy any crappy stock available on earth. It's not like that. You have to be stock specific. When you're investing, it has to be stock specific. You have to evaluate the business models. You have to evaluate the sector. It's not just looking at index and deciding whether to stay in this market or not. Understand one thing. if you are doing equity investments and you're serious about it, then you got to stay in the equity markets forever. Understand one thing very clearly. Don't have these stupid notional thoughts in your mind that if index is going up, probably for the time being I should stop doing in equity investments, and if index is going down, that is when I should put everything on mortgage and put all my money in equity. No, you have to be sensible in making your choices, and you have to put your money across asset classes for diversification purpose. But yes, you have to stay in equity all through. Now, so if I look at the fundamental analysis of the stock, if I look at their profit figures, if I look at their balance sheet, everything looks reasonably good. Their fundamentals are very lucrative, very attractive at this given point of time. Okay, so when I'm talking about NBFC, the first thing that comes to your mind is, how about the NPA in this contracted economy when we are having a situation of a degrowth? What about their NPA? Now, the good news is the Muthoot Finance has been maintaining a loan to value ratio. Loan to value ratio is how much loan are they giving against the value of security which they're taking. So they are maintaining a loan to value ratio of close to 55%, which is very defensive, and it's actually good in the Indian market segment, because you don't want to be very aggressive in giving loans just to create more defaults. So if they're taking 100 rupees worth of gold from you, then they're giving you a loan of close to 55, which means almost like security is being taken for double the amount, which is actually good, right? So one thing you understand is, if the sales numbers are going up for the financial company, then the first thing you want to understand is, are these sales going up because you're giving money without checking the credibility of the clients? You don't want to do that, right? Because giving too much of loan and not anticipating anything to come back to you is not a great business when you're doing when you're into a financial sector. So you have to be very judgmental about your clients and make sure that you give your money only to the right set of people. As far as Muthoot Finance is concerned, they don't have this NPA problem. As I told you, number one, because they maintain a very defensive loan to value ratio of 55%. They can make it aggressive, but in this case they are maintaining it close to 55%. That is, they take 100 rupees worth of gold from you and then they give you loan of around 55 rupees. That's the interpretation of it. Plus, most of their loans are short-term loans. The more the duration of the loan, the more is the probability of a default to happen. That's a general principle. If you're giving a short-term loans, generally companies will not default on that, because within small time the credentials of the companies will not undergo change, their credit ratings will not change. It's only in the long term that companies might face competition, or there might be change in the customers' preference and businesses may start losing their revenues. But in short term it won't happen like that. Plus, a lot of brokerage houses have given a buy recommendation on Muthoot Finance, with one of them being Motilal Oswal giving a target of 1300 rupees for this stock, on a simple understanding that if we are having more job cuts, if we are having a lot of unemployment in the economy, if overall industry job opportunities are shrinking, if there is a degrowth in the economy, then for people the best way to avail loan facilities is by giving up their gold as a mortgage and taking loan. Keeping that in mind, these companies which are primarily into financing the loans against gold, we see good scope for these companies. Okay, apart from that, one negative thing that happened for Muthoot Finance is that last month, that is when the stock started staying under pressure. Last month we had a news wherein RBI has given a permission to banks, not to NBFCs. See, loan against gold cannot be given only by NBFCs. Even banks can participate in that. And for them, the loan to value ratio was allowed to be as high as 90%. Now, you take gold worth 100 and you can still give a loan of 90 rupees. That permission was given by RBI, that clearance was given by RBI to banks. When this news came out, both Muthoot Finance and Muthoot Capital stocks sharply went down. What is the logic for that, sir? The logic is very simple, guys. If banks are given lenient policies of offering loans against gold with a loan to value ratio of 90%, it seems it makes it very easy for banks to offer more loans for customers. And that is where it might happen that when Muthoot Finance is being very defensive, having a loan to value ratio of 55%, and other banks, if being allowed a loan to value ratio of 90%, then it might happen that the Muthoot Finance will start losing its customers to other banks who are more aggressive and more competitive in nature. But the good news for Muthoot Finance is that they have maintained 80% ratio for repeat customers, which means 80% of their customers are not new customers. They are the customers who are repeating business with Muthoot Finance, which means there is a sense of loyalty, you may say, or you may even say that people find it more convenient to go to Muthoot Finance and get their loan. So keeping that in mind, plus the company is aggressively going into development of their technology. Mobile applications are being developed wherein customers can just put a request for loan on the mobile application, and they have also started with this door-to-door services. I was listening to the CEO of Muthoot Finance Group, and he was making a point which was sounding very interesting, is that they are planning to start this door-to-door service where if you apply for a loan against gold, one of their representative will come to your house, evaluate the gold ornaments which you are planning to keep as a security, and immediately within 15 to 20 minutes they will decide how much loan can be given to you. So this process is going to be very convenient. And why did they plan to start with this service? Obviously because they wanted to have a competitive edge. But one very good statement made by this person was that a lot of people, out of their shyness, are hesitant to go up to the bank and deposit their gold to take a loan, because for some of us traditionally gold is a matter of pride, and we don't want to give gold for taking loans. And that is why we don't want to having that fear of the society, what people will think about us, that we are giving gold to take loan, which means we are not financially sound and all. Keeping all those things in mind, they are planning to introduce this service where everything will be a secret between the company and the customer, and you can still avail loan. So this sounds like a very normal thing, but actually this might add up a lot of business, of potential business for the financial institution. Now at 11:42, let's talk now the $1 million question. At 11:42, if you buy this stock, what is my expected upside? The first target which I see very easy to achieve is 1220. Now I'm giving a very clear-cut disclaimer over here. I have made a lot of clients buy this stock, and we have bought it around a month back or so, and we have taken it at a little higher price than the current price. So we are still holding on to it because we know the quality of the stock is very good. But at 11:42, the first target which I see can happen at any point of time is 1220 rupees, which seems to be a very easy target. At 1220, given the kind of volatility in the market, I would suggest that you can book your profits, at least if not 100%, at least for 50% of your total exposure you can book profits. And my next target would be, if it can sustain above 1250 levels, then the next target would obviously be 1300. But 1300 might take some time, but in short term, if you ask me, 1220 looks very easy, which is almost a 80 rupees upside from here. If the stock goes down, which has less probability, but we never know, anything can happen in this market, and anybody who claims to know this market is the biggest fool alive on earth. So if it goes down, which also has some chances, then I would suggest that close to 1060, 1070 range, you can start averaging out on the stock. I don't want to give any stop loss, because I don't recommend coming out of a stock like Muthoot Finance. You got to buy it only if you know you can stick to it. If you are going to buy it for speculative reasons, please don't buy it, even if I am asking you to do it. I'm making that point very clear. Okay, I hope you get some benefit out of this stock analysis video, and we will try to do more of such videos. We'll also try to have another Q&A video very soon, and I would like to thank all of you for your support, for your trust. Equity market is a matter of patience, and I'm thankful to all my clients for showing the level of maturity which you have shown during tough times. 10 days back, market being close to 10,800, we all were having situations where everything was looking red. In equity markets, somehow we don't like the red color, and within last 10 days, market has shown a lot of recovery. Again, if you ask me, sir, what do you think about markets in next 15 days or 1 month or 2 months time? I would say one thing. I have been doing it for last 11 years, and I say this and I will say it again. Markets are here to stay. You have to decide whether you want to stay or not. And this upside, downside will always be there, but as long as you do your research properly, and if you buy things which are fundamentally good, you need to find out the justified price for the stocks. If you feel the price for the stock is justified, you can always invest in it. irrespective of what index value is showing as, because index is a very what do I say, complicated number. It's not as easy to predict the market movement based on index. Index is, as I told you, made up of a handful of stocks, and they do not decide the fortune for all the stocks in the exchange that are listed. So you have to be very stock specific, you have to be very careful, you have to make sure that you don't take too much of exposure in any stock. You have to divide your money across various sectors, you have to do analysis of business models, you have to understand which businesses will revive very fast. Good news is, a lot of rating agencies recently have said that India is one of those economies which are recovering very fast from this COVID impact, and with the kind of growth which we are showing in the manufacturing segment, a lot of fresh investments are expected to come in, because obviously people will be diverting their money from China, and if they have to consider the economies where they can put their money, India has an upper hand. Yes, small problems like Indo-China tensions or the elections in US, these things will have impact on the market, but as long as you buy right and sit tight, nothing should fear you. Equity investments are very beautiful if you have the eyes to look at it right way. If you're just looking at it for the purpose of speculation, I repeat, which I've said many times, your tenure in this market is very short span. If all you do in this market is speculation, think wisely and then invest your money. Very important. Don't listen to people, don't listen to random messages which you get on your phone. Don't listen to people who tell you to give 50,000 and they will help you on 3 lakhs per month. All these things, NSE has started sending mails based on this, because even after so many years of equity markets existing, so much of knowledge being shared by these agencies, the regulators, still people are getting trapped with these kind of a set of people who are trying to misguide you in equity markets. So you need to be very careful, and you need to put your money only in stocks which are worth your every single penny. I hope the video is useful, guys. I hope the advices which I have given you, you like them and you follow them in the equity markets. If there is any way I can help you, you have my number. Get in touch with me and I would be more than happy to help. Thanks a lot, guys. God bless. Bye-bye.